Hey everybody, this is Paul, doing a check-in on a Thursday here to give everybody a general idea how the portfolio's going. So, uh, current portfolio value, filming this, well, just as the market's closing here on the 6th. Current portfolio value is 41,797. Um, by the time I post this video on YouTube, this will actually jump around since the market kind of does its own thing for the next 30 minutes. But so I wanted to give a general update. I'm gonna title this video, uh, I guess you want to call it capitalizing off of the fear trade. Um, and this is basically my thinking on certain things. So in my last video, um, I did point to different stocks and I did give different price points and why I would buy them. Um, so you will notice, uh, if you looked at my videos at say the middle of January, this was at 15,000 for O. And O has kind of been trading in a range as I expected it to as the ex-dividend date, the date that you got to be in there to get the dividend payout. And O's been kind of trading in a range, but it's also been kind of treated as a safety trade. And it happened all throughout January as people were scared over the Wuhan thing. Um, but as I predicted, basically, and this was a good prediction. Sometimes my predictions can go really bad. The Wuhan thing kind of turned out as I thought, or the market treated it as a short-term event. And the reason it's getting treated as a short-term event right now is because it's contained 99% to China. So even though the numbers are growing, and you might be asking yourself, why in the world, and the news coming out of China is like really bad, like plants closing, Tesla's closing plants, Yum Brands is closing all their stores, just everybody's closing their stores. You might be asking, why is the market not freaking out right now? Why is the market at literal record highs? Today's another record high for pretty much everything. And the reason why is because everybody thinks that it's going to be a short-term thing. It's not going to really affect profits. If it does, it's not a permanent thing. And as long as it stays inside China, then it's contained. That's the definition of containment right now. That's not the smartest thing in the world, but so I'll show you what I've kind of been doing. So what my last video, basically what I said is if Disney gets down to 140, I'm going to buy it. Um, Disney went down to uh, right around 137 is when I started jumping in. I saw it bouncing around this 135.5 area, 135.70 area, and that was an automatic buy. So if you're wondering why my O went down so much, previously if you had looked at this said 30 or 40% of my portfolio because I just had so much concentrated in there. So I was making money hand over fist in O. So what I did is I took money out of O and I piled it into Disney. And you can see my trades. So when the market was literally freaking out, so from the 27th to 30th, okay? If we go over here to performance, and I pull up the S&P, and if you look at the 27th, so there's the 27th, 28th there, and there's the 30th. And as the market was freaking out, I was figuring, because everybody was like, "Oh, go in the bonds, go in the bonds," and I was like, "That doesn't. This isn't the recession you guys are looking for." I guess everybody who went through kind of 2008 gets very reactionary, looking for the big event. Everybody's looking for the big event that's like, okay, this is the event. You need to sell everything and go in the bonds. And I was telling those guys, it's pretty clear. I mean, I was telling, and it's kind of hard to do this because I'm just such a, just a junior guy with like 40,000 or whatever. But some of these guys are managing millions, and they were telling people on Twitter, like, this is the time to go in the bonds, rush into bonds. And they poured in the bonds a lot. And they kept pouring in the bonds with very, very, very large sums of money. So very quality stocks just got hammered. And if you look at my watch list, so I pull this up every once in a while, and these are just things that are on my watch list. You could put it on a watch list just to kind of see how it performs since you added it. And there's just different things that I added to my watch list that I've been watching, but I've considered expensive. I wanted to buy them prior to December, but I didn't have the money to kind of buy them in the quantities that I wanted. And then they had these huge run ups. Well, before Disney dropped down to 135, it was sitting at 145, and they have Disney Plus. So the obvious thing that I said is if it got down below 140, it's an easy buy for me at least. Looking at the chart and whatnot. When it got down to 135, I was moving whatever money around I possibly could to get as much Disney stock as I could at 135, and it it kind of worked out exactly how I thought it was. So what happened was is okay. So here's another one. IBM came out on their earnings call and they said, "Hey, we had a good quarter. We also paid back 10 billion, and it went up to 142 or something like that, and then it went down, and then they paid down debt, and then it went down, and I was like, well, this makes no sense, but it got kind of caught up in the whole end of the world Wuhan situation." Because the people on the major big guys were like, "Oh no, we got to go in the bonds. We got to rush into bonds. This is it. This is the event that kills everything. Second largest economy in the world is coming to a halt." And what I said is their central bank would respond almost identical to what our central bank did. Because they still have a lot of rate cuts that they can do, and they still have a lot of money printing that they can do. So I knew that anything exposed to China was just going to just get sold off across the board. And you saw it as those days were selling off. And there's been times like that in this market. Um, December 2018 was a really good example. That's one that could have been a 50-50. If the Fed had said, no, we know better, we're going to raise rates, you could have really had a recession, but the recession wouldn't have started or wouldn't have been declared for over a year and a half later. And even then, so you get these times in the market where Wall Street looks at a situation and says it's the end of the world, everything's going to end right then and there because they're so used to that one event, like AIG failing or Lehman failing. Like they're treating like there were some people that are just really, really professional investors that were treating the Wuhan situation as if Lehman had just failed and it was going to take the entire world economy with it. So you better rush in the bonds. And it just didn't make any sense because if you walk around like the mall and stuff, everybody's still buying stuff and everybody's still doing their thing. They're putting stuff on credit cards because that's what people do. And they were just buying stuff. And I was like, I don't think this is the end of the world. And the moment I predicted a few things on Twitter. I said, and I was telling these people, of course they're not going to listen to me. Nobody's going to listen to me. But I was saying is, as soon as you hear the words contained, because every time you saw the word contained come out of China, the market snapped back that day. But then when you heard, oh, there's more cases, you know, the headline news is just like, oh, there's more cases. Oh no, 400-point sell off or something. And then like this massive rush into the TLT, which is a bond tracker, the long term, and then zero, ZROZ. Just this huge rush of money into those. And then I knew as soon as either it got contained to China or you started to see the counts go down, the people were just going to pile back out of those. So there's a few of them that I picked up that I've been dying to pick up this whole time that were on. If you look at my watch list for many of my previous videos, the thing was super long. So like for example, I picked up Disney at a price paid of 135. Disney's been paying me money hand over fist since then. It's been easy, easy money. I actually had 50 something shares, and now I'm down to 27 shares. So, you know, Caterpillar, I've been trying to pick up Caterpillar for a very long time. I got into Caterpillar 133. Um, Johnson and Johnson, I've been looking to try to get back into that. I got into Johnson and Johnson on the 27th at 148. 148 for Johnson and Johnson. It's up to 153 now. This is one that I just took a position in, Leggett and Platt. This is a long-term position. I'll show you why I got Leggett and Platt here in a second. They're an industrial. They do a very big industrial, dividend aristocrat, I believe. Very good dividend yield. And specifically, I picked them up because of when they pay their dividend. I'll show you why here in a second. I picked up, um, what is this right here? Sorry, Exxon at these insanely cheap prices. Um, there's been a really big move away from, there's starting to be a move away from oil stocks and whatnot, but oil's around. So even though Tesla is hitting like $1,000, I only have seen like one or two Teslas around the New Orleans area. So it's hitting prices as if everybody owns a Tesla, and it's not quite there yet. It'll get there, I promise you it will, and I'll probably end up selling Exxon if they don't start to move to some green. If I don't see, what I would like is if Tesla just teamed up with Exxon and said, hey, we're just going to install charging stations at all these Exxon stations. That would be amazing. That would justify that huge price you see on Tesla right now, because they're pulling a lot of forward volume, or forward volume forward, I guess, or demand forward. But if they teamed up with somebody like Exxon or Shell or BP, especially, BP is trying to paint themselves as green again, and started installing Tesla chargers at BP stations, that's where I would love to see these names go. Um, but every car I see on the street still drives around with oil in their gas tanks. So when I see Exxon getting hammered because oil is getting destroyed right now, because, well, it's not really getting destroyed, but I mean, it's getting wrecked right now because of the China situation. Unless you think China is just going to go into a recession and never come out of it because of this Wuhan thing, unless you think the Wuhan thing is just going to take out everybody in China, in which case we have way bigger problems. Some of these are easy to jump into real quick and get very quick dividends off of them. Um, so so let's see what we got here. KRE, I actually jumped out of that. I backed that down to one share. Um, I might bump it up. I don't know. It depends on what rates do. Um, but yeah. So I got Cat. I got into Travelers. So what I wanted to show you is specifically how I am positioned dividend wise. So if you look, you got the usual spike up in the months where a lot of companies like to pay. Previously, as I've mentioned on other videos, if I go to my 1 month, or let's go to a 2 month, is I prefer to have it to get weekly. And there's ways to do this. This is just a 1 month view, but there's companies that pay in the middle of the month, week or monthly. O is the really big one. Um, there's some people that have just straight up retired off of O payments because they have so much invested in them. Then you have quarterly ones that pay in the middle of the month. Um, you have Southern Company, for example. And this is when March starts and a lot of big name companies come out. So the reason why I picked up LEG specifically, if you go down to, so if you see in April, you see this dip right here, so it goes right here, so 179, 78, and then it starts to jump back up, and then 179, and then it kind of does these little dips. So if I go down to April, so what I wanted to do is I wanted to get a very good dividend company with a very solid history of paying dividends in April. So all I did was I kind of looked around and I looked at a Gen X dividend investor, and he did his top 20 list, and then LEG was on my watch list specifically. So they pay a dividend on April 15th, and I own 15 shares. Extremely stable company. He has a whole video on it, so it's a Gen X dividend investor, and he has a whole video on Leggett and Platt, and that's an easy one to buy. That's one that I'll load up on shares and not even not even be stressed about it. Xerox was another one that I jumped into. Um, it's Xerox is one that I've owned off and on. I've waited for it to kind of come back down and then go back up. So I got back into Xerox on the 31st, but I had this one little point. This was a dividend. You can see I've owned a little bit, but I jumped back in on the 4th at 36. Um, just an 11p company with a crazy good dividend. Or where's it at? Yeah. Or and then also I got an IBM. I'm kicking myself for not getting more IBM. I got an IBM on the 22nd, and it's got a 4.15 yield on it. So I had to make a bet. Either it was going to be IBM or Disney. Both of them went up, but I didn't want to sell out any more of O. I want to keep my O position exactly, pretty much right where you see it. See here, it's 10% of my portfolio, and then once you add in LTC, it's about 1.7%. So right around 12%, give or take a little. But that's a good place for my REITs to be, especially since I still think, the Fed is eventually going to have to kind of cut. Um, but the chances, the Fed has already said, unless they see huge inflation, they're not going to raise rates. If anything, it's easier to price in a rate cut than it is to price in a rate hike, especially with what's going on in China, and especially what's going on in the way that you get demand slowdown in China. That's going to hammer Europe. I wouldn't want to be Europe right now. They're going to get hammered by this whole situation. Another one I've been adding slowly. So if you see, I bought a ton of Coke also. I bought a bunch of Coke at 57. I bought it at 56 right here. You see this right here. Just extremely solid dividend names. Pretty much every day I log in my account on when the market first opens, I'm up almost 0.7%, give or take a little. Now that the market's starting to bounce up against the highs that they were at, it's gonna start to kind of slow down. Maybe, I don't know. Depends on how much Fed pumps in and whatnot. But so this is a good general idea where my portfolio's at right now. Today's the 6th. If I had to add money right now anywhere, specifically, if you want to know what I specifically did today, since Disney it went up to 145, then it went back down to 141, and it's kind of trading in that range that it was trading in, even though they beat earnings, but they didn't give guidance on Disney Plus. I felt safe taking some profits off of Disney, very small. So I sold 5 shares of Disney, and I took profits, and I bought Johnson and Johnson since it dipped today. And if you see, I bought it at 153.50, and it's at 153.53 right now. So, and then also another one, since I'm looking at it right now, the where's it at? Verizon. Um, I've been trying to get a 5G play for a while. I know that you can do that through the suppliers for equipment, but the suppliers have exposure to China, a lot of exposure to China. And with the whole Wuhan thing, it just made a lot more sense to put it into Verizon. You might be asking me why I didn't do T-Mobile, and the simple fact is, it's just a flat out, it's a dividend. It's a dividend stock. It's a trade that, you know, I know a lot of people that have Verizon that aren't dropping it anytime soon. They just have it. Um, so, it's at 4.16, just a just a crazy solid name. Um, so like I said, whenever you get these fear trades, and it's going to happen again this year, especially around the presidential election. If a Democrat wins, you're just going to have some people acting like it is the end of the world. Especially if you look at CNBC, Bloomberg, um, they're just going to act like it's the absolute end of the world. Um, and everybody's going to be like, "Oh, it's the end of the world! It's the end of the world!" And we need to go somewhere. Where are they going to go? Are they going to go to gold? Okay, I guess. Um, maybe TLT and zeros. But if you look at TLT, so here's TLT. It's at a 1.99% dividend yield. or and it pays monthly, I guess. Cool, I guess. Are people just going to go hide out in government bonds that are paying less than 1 or less than 2% for the next for 4 years? No, it's they're going to go. So if you hear that a Democrat's going to win, and it's, if you see a Democrat win, so this would be the next time that's probably it's the market's going to lose its mind. I wouldn't want to be in. So if you hear that a Democrat's going to win, I would not want to be in private prison stocks. I would not want to be in coal stocks. I wouldn't want to be in coal stocks right now because the market's pretty much telling them where to go. But or the larger guys like the pension funds and the 401k guys like Vanguard and them are telling the coal stocks where to go. So it's pretty obvious you would want to be in. I wouldn't want to be in defense stocks, but Democrats and Republicans keep raising the military budget. So I mean, come on. I would want to be in like clean energy stocks. I would not want to be in if you hear a Democrat like say maybe Buttigieg or Warren or somebody like that wins, I would not want to be anywhere near healthcare. If you notice, I don't have any healthcare in here except for maybe J&J. But even J&J might get hammered because they have a pharmaceutical interest side of their thing. So J&J could get hammered. It's exactly like when Trump got elected. Once you had once you had Trump elected, so you just kind of have to see how the Senate works out, the House works out, and how the presidency works out. But that'll be it for me. So thank you for listening. If you have any questions, leave them in the comments.